Welcome back to Dummy Boy Finance. I'm Dummy Boy. In this video, I want to go over Uber and Lyft because both of these companies took a huge dip in share price today, and I want to go over why. So today we got an article saying Biden's labor secretary says gig workers should be considered employees. And so off of this news, we saw a major sell-off in Uber, in Lyft, and DoorDash. And so I want to go over why this is a bad thing, but why this is going to be worse for Lyft than it is going to be for Uber. So when you have contract workers like we have in the gig economy, you can exploit them. You don't have to pay them minimum wage. There's no set amount of hours they need to work. There are no benefits. But once they are considered employees, there's a minimum wage. There's a minimum amount of hours. There's considered overtime. And there are also benefits, potentially even a union. So there's a lot more fees. So for a company that has contracted workers, they save a lot more money through this process, which is why companies like Uber and Lyft do not want to have employees. They like the gig economy the way it is. So if we look at both Uber and Lyft, Lyft has a very simple business model, whereas Uber has a lot more complexities in their business model. Another thing to take into consideration is that Lyft is only provided in the United States and in Canada, whereas Uber is provided in over 80 countries. And so when you look at a business model between the two, Lyft has a very solid business model in the gig economy because they are just zoned in on a one ride sharing service. And so they don't care about the delivery. They don't care about expanding their business. They are just focused on the ride sharing. Whereas Uber has not only the ride sharing, they have the food delivery. They're trying to get into the autonomous driving space. There's a lot of different segments in Uber, and this multi-dimensional business model will actually help blanket them from this type of law if it gets passed. So immediately after you get news that triggers a sell-off, I have to look at the charts of both companies to see exactly how bad this could be and where exactly do we find opportunity on a dip. So one thing I want to mention is that both of these stocks trade very similarly, but I feel like if this becomes a law, we are going to start to see some divergence in share price because I believe this law would impact Lyft a lot more. The reason Lyft is going to get hit harder is because of their one-sided business model. And so because they're only in the ride sharing business, all of their workers would be considered employees. So that is going to hit them 100%. Whereas Uber is not just in the United States, they are international. And so if this law was to get passed in the United States, yes, Uber would take a hit, but because Uber has exposure internationally, it won't affect the rest of their business. And so if they are considered employees just in the United States, Lyft gets hit 100%, whereas only a percentage of Uber gets hit. And also Uber has a lot more businesses under their umbrella to shield them from such laws. So right now we're looking at Lyft first on the daily time frame just to show you guys what's happening here. The first thing that I see on this chart here is this gap to fill right here at around $30. And so I'm not saying Lyft is going to get down to $30, but I am a firm believer in all gaps get filled. And so right now the market is at all-time highs. We are starting to get some tough news here in the gig economy that is going to affect Lyft. And so if the market sells off, I believe that Lyft is going to sell off a lot more, and we will probably fill this gap to the downside. And so at this position right here, $30, I will be buying Lyft once we get there. This is not going to happen overnight. We aren't just going to see a plunge in share price, but if the market sells off 20, 25, 30%, I do believe Lyft will fill this gap to the downside eventually. And so right now I am not interested in buying Lyft. I would be interested once this gap is filled, and I think that would be a very nice bottom in Lyft. And so you can see just on our volume, we had extraordinary selling today. I don't think we've had this type of selling since about November 12th here. And so overall, Lyft is going to be very vulnerable if Biden's labor minister actually passes this as some sort of law. In contrast, if we look at Uber only dropped 6% today, I believe, because again, Uber is not going to get affected as much as Lyft, and so Lyft is going to take a larger hit. However, One thing to mention also on Uber is we have a pretty large gap to fill right here at around $35, $36. And so same thing with Lyft. If Uber gets to those prices, I will be a buyer. Just to be very clear, I'm in neither one of these companies. I have held Uber in the past at around $25 and I have sold since. And so right now we have two gaps that are looking extremely juicy on the downside. And so if the stock market wasn't at all-time highs and our economy looked a lot better than it did right now, I wouldn't be really fearful of this gap. But because we are at all-time highs and our economy looks a little bit shaky, we don't really know how to progress from here, and we haven't really seen the real impacts on our numbers. Tech has done very well, but the rest of the economy has not. And so those kind of give me some sort of clues that if we get a major sell-off in the market, this is going to be a gap that potentially gets filled for both stocks. And so that is why I am very, very patient on plays that have gaps, because eventually in the long run, right now you may think I'm crazy, but if we get some sort of market sell-off in a year from now, we're at $35, I will be there to say I told you so. And so that is why I want people who are not in these companies to be extremely patient, because there's going to be a lot more downside than upside, especially at an all-time high mark. And so I use this Fibonacci retracement just to show you guys the levels we've been trading at. So you can see this red range is a very overextended range, and we've been trading in this range for a very long time. And so if you look at where our gap is, our gap would be at a pretty normal valuation. And so that is why it's not out of the realm of possibility to see this gap filled. And so if people are assuming that this is the dip to buy Uber or buy Lyft, I would personally recommend and say be very patient, because right now is not the time to buy a dip on plays that could potentially go a lot lower. If we did not have these gaps on our chart, then yes, I would say buying a dip on a stock like Uber would be extremely promising. But because these gaps are here and the market is at all-time highs and there's potential downside risk in terms of just the market selling off, plus company specific risk with potential gig workers being employees, this does not look favorable for a long-term trend in Uber. Am I a bull on Uber? 100%. Am I a bull on Lyft? 100%. Do I think Uber is better than Lyft? 100%. And so overall, these gaps to fill are just something that I wanted to let all investors know, because I've seen a lot of people asking me if now is the time to buy the dip, and I would say no. We could definitely squeeze out some more gains, maybe potentially get back up to $60, $65, but I do think there is a lot more risk to the downside. You can see we are in overextended ranges right now looking at our Fibonacci retracement. Another thing I want to show you guys is on the weekly time frame, our MACD had a crossover, and this right here does not look good. So we were very close to our signal line, but now we are starting to move down. And if we look at our RSI here, we haven't seen an RSI below 50 in a very long time. And so that means we have been on very high levels here on Uber. And so on our drop here in our 2020 market crash, you could see our RSI got down to a 30, which presented itself as a very nice buying opportunity. But right now, because our MACD has crossed over and we are still at very high levels on our RSI, I do expect to see a lot more downside here in Uber. Another thing I want to mention is if I bring this out even more to our monthly time frame and we look at our accumulation over distribution, we have seen a ton of selling in the last couple months here on Uber. And so I just want people to understand right now what they are going to be buying. If Uber starts to drop, I would still be very patient, because the gaps on the chart are extremely big. And so for a while now, we have heard contract workers in the gig economy potentially being employees, but nothing has really come to fruition. I know New York passed a bill where they need to be, but for the most part, we have seen nothing really come to fruition. But if Biden, the United States president's labor secretary, decides that companies like Uber and Lyft need to treat their contract workers as employees, it is not going to look good for the share price in the short term because there is going to be a lot of fear and a lot of unknowns with profit margins. And so there's going to be an adjustment period. And if the market sells off, you're going to see a very nice buying opportunity in Uber and in Lyft. And so right now, I don't think you should be buying Uber or Lyft. Again, they could both keep going up, but they can only go up for so long. Those gaps are looking extremely intriguing. And for somebody who likes to buy on opportunity, I would be watching those gaps very closely. I think those are going to be the best time to hop in on those plays. And in the meantime, there are going to be a lot better opportunities to buy stocks and companies that have just better fundamentals in the short term that are capitalizing on everything that's happening. And so don't just rush in and buy Uber because you saw it down 5-6% or buying Lyft because it's down 10%. Just be patient, wait to see where this uncertainty leads to, and then at that point, make a better decision. And so right now, I just wanted to let you guys know about those gaps on the chart because I think those gaps are going to be extremely valuable at one point in time. I want someone to pin this moment or this video saying that Dummy Boy is letting y'all know to buy these stocks when the gap gets filled, not right now. And so if you guys enjoyed this quick little update video, don't forget to like. We are on the road to 10K subs. So if you made it to this point, feel free to hit that subscription button. This is Dummy Boy Finance. I'm Dummy Boy, and I'll see you guys in the next one.